But stock of the day is FleetPartners. Shares are surging higher this morning after the vehicle leasing company has received an unsolicited offer from SG Fleet Topco to acquire the company for $3.60 a share. Now, the share price had closed around $2.85 on Friday. The offer, which is non-binding and conditional on due diligence, regulatory approvals and agreement on transaction terms, is currently being evaluated by the FleetPartners board. So if you are a shareholder in FleetPartners, what should you be doing at the moment? Let's bring in David. First of all, what do you think if you're a Fleet shareholder you should be doing?
Yeah, so if you pull up the chart there, I'll talk to the chart because you can actually kind of see the personality of what it had been doing even before this announcement came in. So those little red circles are where sellers have historically stepped in. You can see it peaked at March in 2024 there, and from there, sellers had kept selling every time. Those little red circles kept going lower, 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 and lower. You can also see around that $2.40 there, you can see the green circles, which is where buyers historically came in. Okay, so they wouldn't ever let it drop before $2.40, but every time they bought, they would sell lower and lower. That last little one where it did drop below $2.40, this is what the market loves to do. It's called a liquidity bottom. So what they do is they come down, they get everyone very bearish, sentiment goes very bearish. They get all the stop losses from everyone that bought off that major support at $2.40. And then can you see there how then they started buying again at $2.40? Yep. Then from there, after they bought at $2.40, you can see now the red circles are going higher. So it actually just broke out before this announcement came on. So the trend was already starting to change. You can see the offer price is right there in that 260. That's back where it was back at that top. So nobody's going to be underwater now. Even everybody that bought at the very top a couple of years ago, they're back to break even. There's probably going to be a few people that are willing to take some money off the table there, going, you know what, I've been holding this thing for a couple of years, I got my money back, I'm happy to get out. But if we can get through that 260, 270 zone, then we're kind of looking pretty good again.
Okay. So as a Fleet shareholder, what should you do now? Do you take your money and run on the market now, or do you just hold on?
I would hold as long as it stays above where that last buy-in was at 220. So as long as it holds around that 220 there, hold on, because it should keep going. But yeah, it just depends on whether or not you've been underwater for a couple of years or if you've just bought. But for now, a hold for me.
Okay. Sanjee, what's your review?
I think FleetPartners is not something us at Teaminvest would have really looked at.
Why?
But look, well, I mean, they've got quite a large debt. I mean, it's almost 300% debt to equity over there. The return on capital, return on equity, it's so low, only a couple of percent. So it's not really something that would have ever interested us at Teaminvest. The offer is now coming in at maybe an 8-time multiple now or thereabouts. So it's looks attractive in terms of taking the offer. For us as a long-term business, I'd much prefer Smart Group if you're into that fleet and that kind of space. Smart Group does very similar business with a lot less debt, a lot more stable earnings, and that continue to grow. The only problem is Smart Group is probably priced a bit at the higher end of its valuation.
Right.
I'd look to get it cheaper, but I think it's a much better business. So if they're offering you a nice upside to where the current market is on fleet, I'd say, yeah, go for the ride, take it.
Right. Take the money and run.
Take the money and run.
Okay.
Yeah.
All right. Good views there on from both David and Sanjee on fleet.